Question number 10, our last question. We're going to be looking at a hypothetical scenario. What is the journal entry to eliminate the intercompany accounts between Parent Incorporated, 100 LLC, and Sub LLC when consolidating the financial statements? Is it A, debit intercompany payable parent $75,000, credit intercompany receivable subsidiaries $75,000, B, debit intercompany subsidiaries $75,000, credit intercompany receivable parent $75,000, C, you don't need a journal entry at all, D, you debit intercompany sub LLC $25,000, and you credit intercompany receivable parent $25,000. The answer is A. We're going to debit the intercompany payable with the parent for $75,000, and we're going to credit the intercompany receivable of the subsidiaries for $75,000, which will net those to zero because when we have a consolidated balance sheet, we don't want to show intercompany payments because from one economic entity, there is no due tos or froms from each entity. They're one economic entity, so you're looking at them as one unit. There's no intercompany payables between each entity. Yeah. 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 Yeah.